So now I'm sure everybody can see the screen, and all of you have this question always that if we have a stock and it is 50% up, why do I not sell it? So before that, let me introduce myself. I am the founder of this company called Client First Capital. We manage roughly $20 million plus. We have delivered roughly 64% return from inception, and the last year we have delivered, so in 2020 we delivered roughly 39% return. So it depends who invested when, and some of the people who actually invested in the middle. So everybody's return is different, but overall on the average side of the strategy, we delivered a huge return, and it has come from 2 or 3 stocks, which is always the case. Last year we delivered 21.68 net to the client's hand. It's an average figure, but actually people who invested in January, they made much more than, they made roughly 26% net return, and people who have invested in middle because of the market movements and they have not completed 1 year, the returns could be different. So anyways, that's not really important in the short run. We are down from 1st of this year, which is 3rd of 2022 till 25th January, we are down by 7.6%. We would have been down 2% more because of the last 2 days fall. So that is again the short-term market movement. We have a dream of becoming a global startup. We are here to reduce the wealth inequality, which means we want to help a lot of you who have put in your money into fixed deposits or not able to put into the stock market or in the investing. We would like to reduce that gap, and that's our main motto of doing this webinar. We also have one very important goal in life. We do not manage the HNI and UHNI alone. We also want to create HNI and UHNI. And we love to impart the financial education to the masses, and that is what this session is all about. Customer is most important for us. We listen to them, we respond to them, and we learn from them. The reason we are here is because of our customers. And we are creating a vibrant workspace. We strongly believe that if we are good investor, we should also be a good businessman. So we are purporting that culture across the organization, enabling people, helping them with the training and decision making, and that is what is the goal of this company. Now let's see what I have in the store for you. So these are some stocks which have gone up significantly and also gone down significantly in our portfolio. So we were long Continental Resources, we sold it. We still are long Danaos Corporation. It is better for me to talk about my companies. I can take the example of your company, maybe 1 or 2 company you can post on chat and we can take it. But this is the company which is our bread and butter, and every day we see them. And we also hear from our investor, when the company goes up, they tell us why you don't sell it. So Danaos Corporation, the current selling price is 91. By the time this presentation was made, this second company, the price went up by roughly 13%, 14%, so it is $91. And I remember one of my biggest investors told me at 84 that why I did not sell it. The stock went down, and then today it is at $91. So these are very important questions, that what we should do, when should we sell, when we should not sell. Sketches, our portfolio, it is up on an average 22% from our initial buy price. A very good company which we have bought, Stitch Fix, where a lot of our friends are unhappy because it went to $108 and we did not sell it, and today it is at 15.89. Some of them are losing 40, 50, 60%. So that's also one thing we would like to share with you. There is a company called Ori's Bargain Outlet. The average buy price is $72. It is down by 36%. And we have this classical mistake of valuation which I have committed. Charlotte's Web Holding, which we bought at $10, $9, $8, and so for many of the customers it is at $5 or $4. It is down by 84%. So now let's understand what should we do. Our webinar's topic today is, what should I do if my stock is 50% up or 50% down? First of all, understand who you are. Are you an investor or you are a trader? So I can run an Excel sheet with you right away and we can classify. So from here now I will depart from the the presentation, and I will create an Excel sheet so you can actually figure out who you are while investing. Because let me ask you also, how do you decide a stock price? The reason I am asking you this question, because you are in a market where you are playing with all other investor, everybody want to make money, but everybody has a different time horizon. So the most important thing which we need to understand, that the investor who is the market which we are there, everyone has a different objective. No two people have the same objective. So let's say if a stock is at 100 price to earning, or a stock is, let's say, at $100, and I only want to make $5 or $10, and the momentum is very high, as a trader or a momentum trader, I will just buy the company to make $5 alone, and I will then sell it. So my objective is to, as soon as I make money, I will sell the stock. So let me now share the screen with you and classify who I am, and accordingly I should take you there. So first of all, who am I? So let's say I'm a trader, and second is I'm investor. Now if you are a trader, you have a stock 10% or 20% up, sell. So first scenario one. So we'll take the scenario here. The stock is up. You are a trader, just sell. Your investor, it is not easy. Can't say. You should sell or not sell, we cannot say. So right now we will just wait for investor. Now let's say your stock is down. So I have a request to all the traders who have 1 month, 2 month, 3 month horizon. Please put up a stop loss and cut your losses. Which means even if it is a 5% or 10% or 15% down, you should cut your losses and you should sell it. Because you are a trader, you have nothing to do with the company's price. If you understand technicals, I don't think so you should be in this webinar. So if you understand technical for the trader's perspective, you don't need it. But now we are investor, and we are investor with a 5-year horizon minimum, or generally we are business partner of these companies. That's how we treat ourselves. So what is the most important thing in the investor is the horizon. What is your horizon? So let's say my horizon is 5 years. Anybody who is above 3 years in the stock market is called an investor, in my opinion. So if I have a horizon, it should be minimum 5 years. Now second thing is, if the stock is up, what should I do if I have a 5-year horizon? The question is 50%, right? 50% does not mean, so stock is up 50%, doesn't mean I should necessarily sell. So cannot decide alone on the stock price. And this is the classical mistake. So first question to all of you is that, first of all, don't invest in the stock on your own. You should not invest in the stock on your own, because they take away a lot of your time. You keep looking at them every day, and then you want to understand, and you will go to people and tell them, can you advise me on this stock? So advice or reading or research should be done prior, not earlier, not afterwards, that oh, now my stock is gone down. So first of all, when a stock is up 50%, we need to look at, if my horizon is 5 years, what is the business cycle? Is the business cycle maturing, or my stock is overpriced based on the intrinsic value calculation? Now here I am getting technical, my friends, and you have no idea about the intrinsic value. So I will not talk about that. Let's talk about the business itself. So we have a classical stock here called Stitch Fix. Now Stitch Fix is right now trading at $15, and any person will tell us that it's a mistake we have committed. We should have sold it at 108. Now why are we not selling? So my simple thing is, I will study the business, that why my stock is at 15. Fine, it can happen. People are, because now I just told you, in market there are different type of people. Now some people are not feeling good now. This stock, the chairman has left the company. People are going out. The stylists are not feeling well, because stylists are supposed to be given flexibility. So this company, so before we go to that, I think we have to also tell you what this company does. So people who have already heard about it, sorry, but this has to be repeated, because just if I'm an investor and the stock is 50% up, no call, or down, no call can be taken. This company basically gives you online capability to buy the clothing, and they give you very truly personalized experience. They are a data scientist company. In 2011, the lady called Katrina Lake from Harvard, she launched this company, and now today company is selling goods worth $2 billion, and sorry, more than $2 billion. And the latest earning report also, they have beaten the expectation of the street. Now the reason this stock is a great stock, because first of all they sell it cash. So they block your credit card, you give them a lot of data, and based on that they help you to buy online, which is called freestyle, or they send you a box which is called fix. You can choose whatever you like to order. So every 3 months you will have a box which is called fix, so that in case you do not when you wanted what you wanted, so they will take care of you. So I am that buyer. I'm wearing that t-shirt of from Stitch Fix. It is right now in the UK, and it is right now in the US. So the company started in the US, and they have growing triple digit numbers in UK. That's one. So that's a positive side of the company, and that is about the company. Now there are negative side. Just now I told you, the CEO, the founder, has stepped down, has become chairman, keep leaving the company. And there is one more scenario where the stylists have not been allowed to have a flexible working hour by the new CEO. Now these are challenges in the company. Here is, if I will sell just because price is down, I will book my losses. Now when my horizon is, one second, sorry, when my horizon is 5 years, I should study my business. So let me now talk about the business. Now when I look at the business, so first question, does the business have debt? Does the business? Answer is one comfort. Do you have cash on the balance sheet? Understand one thing, balance sheet is the one which helps with the whole thing. If balance sheet is strong, then you can sleep peacefully. I am roughly losing $1 million in the stock, and I'm sleeping peacefully and delivered 26% last year, because don't love or hate your stocks, and don't get involved too much. They say with children and with stocks involved, how much you can understand, or you can say with I don't want to say something else, but children and stocks only involve how much you can understand, because we don't have to run that company. I don't have to run Stitch Fix. रात को 12 बजे बैठ के 2 बजे बैठ के रिसर्च कर रहे हैं, कोई मतलब नहीं है. It is only wasting of time. What we have to look at is, does the company will become zero? First question is that. The reason I will sell is to cut my losses, and then whether I will make money, the second question. So first question is, does the balance sheet, the business have debt? No. Do they have cash on the balance sheet? Yes. How much is the cash? $400 million.
Sunny.
Please mute.
Wednesday morning I will go.
Sorry guys. I've been repeating, please, I'm humbly requesting, please mute. We hear your family talks and other get disturbed. Let's move forward. So now third question. Third question is that company raising money. So maybe they're diluting the shareholder. Company raising money. So a lot of banks raise money in the COVID. Does company or is company raising money? Wait a minute. Is company raising more money? Which means stock dilution is happening. I can also write it down. Stock dilution. No. Fourth, is the company only company in that sector which is down? So basically, if the whole segment, for example, right now the whole oil segment is up. I'm sure you know it. So if some other company in the oil segment is not going up, you should have an alarming signal. So the question is the company only company which is going down in that sector? So companies into online retailing, companies into consumer discretionary, like Amazon, like other company. So is the company down, the only company whose share is down in that sector? The answer is no. Let me inform you, even Amazon did not achieve their quarterly target. Quarterly targets are not something which is like, if you will not achieve it, you will be dead. But the analysts have the huge industry of forecasting the share prices. It is a lot of in demand. People also expect us to also forecast share pricing, which I have no ability to forecast or predict. Even if a stock portfolio is 15-20% down, you should relax. You should only question the company. And there are some investors who help us. They send us some information which is very, very good. And we also every time retest our thesis. And again, I'm repeating, even after doing all that, the portfolio is doing good. So never have a single stock on a portfolio and see whether it is doing good or bad. Always have a bunch of stocks in the portfolio. So you will always be making money if you have bought a good company. But if you have bought wrong companies altogether in the wrong valuation, then it's a separate case. So the fourth question is the company the only company whose share is down the sector? No. So Amazon is there. We have one more company. Then even the automobile comes somewhere in the consumer discretionary. What is consumer discretionary? So consumer discretionary is when I have money or whether I don't have money, if I can borrow, I want to buy a brand. So a shoe, a jogging shoe, or a good t-shirt, or an Apple laptop is a brand, or a good watch is a brand, is a consumer discretionary, which is like I want to spend and this is my lifestyle, and if I don't have the money, I'll borrow from the bank and buy it. So this company comes under the consumer discretionary. Now, what is company's valuation? Because it is possible that company can go further down, right? So now my question is, what is the company's valuation? Now this is something tricky, but I'll give you simple figures so you can understand. So I will open, let's say, a good website to track the stocks, Seeking Alpha. I'll go to Stitch Fix. These are all basic steps, guys. We go in detail. Now I'll go to Stitch Fix and I will go to the, let's say, what do you call, 1 minute. So see, the software is selling, sell. We don't look into that, all that. So market cap of this company is $1.61 billion. Market cap is $1.61 billion. I will go to financials and I will see that company has just achieved a sale of $2.1 billion. So $1.6 billion market cap and $2.1 billion sale. Company selling cash. Company has cash on the balance sheet. Company has got zero debt. Company is something which I should not sell. And now I should think, why should I keep the company? So company's valuation is very attractive. So there is also one way you can look at so this company is not profitable. They have purposefully not made profitable because they want to have the growth in the market, and there's a huge growth they have in the market. Having said that, please understand when market share is very important. So when we ask this company that who is your competitor, and they were not able to exactly mention any competitor, and when you get these information, it means they have no competitor. So like Amazon has no competitor because overall they have no competitor, but they might be having a sector competitor or an industry competitor. Similarly, this company has no competitor. So what is the company's valuation? Very attractive. How? Price to sales, there is something called price to sales, is roughly 0.76. Now when you have this kind of price sales, you should read more about the company. That is the only thing I can tell the layman investor. Now let's say you're an informed investor. For you, what I can tell, now look at, is the company buying the share? Is the company buying their share? Is any big investor buying their share? Or so there are a lot of people who are 8%, 10% owners in the company. Any other institutional investor buying companies? Now I will go with you and I will show you how to do this. So I'll go to Stitch Fix, I'll go to investor relationship, and I will go to the, let's say, Stitch Fix newsroom, and they have this, the news. You see again one person left, negative, negative, 1% left. So new CTO is coming here. Okay, I'm not getting any information. So I'll go. See, they have also tied up with Venus Williams. So that's a good thing. If I'm reading, we are teaming up with Venus Williams to empower women to reach their 2022 fitness goal. So they are looking at fitness, etc. Anyways, we are right now interested to know whether somebody is buying the share or not. So we went to again, and this time we'll go to press release. Yes. Can you see this? Stitch Fix announces share repurchase authorization of $150 million. Now that's a great news. But if I'm if I'm a fund manager, this is just a piece of a cake. I have to read the full thing. But you should now dig further. So company itself buying their share means company finds this as the most important opportunity in the world, and company that's why buying their share, because company can also buy other share, because every company has cash and they can buy securities of debt or equity. So it's a very positive sign to start with. Doesn't mean this is true, because as an investor we also go deeper than this. Is the company buying their share? Yes, positive. Now let's move forward. Now we will go to something called SEC filing. I'm repeating for all of you. If you are buying share individually, either go for a purchase a service or go through a fund or like us. But if you are buying share on your own and if it is 50% down, it will be very difficult for you to understand what is happening. So let's say Stitch Fix, I can do from there also, but the easiest way is share buy. I just put something on the search and let's see what happened. So this happened 3 weeks ago. See, insiders and institution bet big on Stitch Fix. So this is to all of you who would like to sell a stock when 50% down. You do not do research. If you will do research, so insiders and institutions bet big. Now insider we know now. Now who is buying the shares? Okay, working capital advisor, which is already 10% owner of the share, are buying more shares. Okay, and others like Vanguard, Jackson Square also hold large portion worth mid-single digit in regard to the share outstanding. Anyways, I will not go to that, but working capital advisors are buying the share, and I have checked this myself. We check it. All these if you see belongs to working capital advisor. So if you see, working capital advisors are buying the shares and now they own 11.979 million shares. 12 million shares they own, and today's price is, let's say, 16. So something around 12 into 10 is 120 million, and another 80 million, 60 million. $180 million worth of share they own. And I know this news, you can also check that they have been a huge buyer. So that is one thing which is making, now I think we can go further also. So yes, other institutional buyers are also buying the share. Now one very important thing. In this company, the CEO stepped out and became a chairman, and she is also a founder of the company. Does founder or did founder sell their share? Now why I'm asking you, because the same question is valid for Peloton. So if you go back to Peloton is into deep shit. I'm sure a lot of you have Peloton, which we never bought because of the valuation issue. So our biggest issue is we can't overpay for a share after committing some mistakes. Still, the stocks will go down 30-40% from our value, but we are sure that it will come back, or it should come back, because we have not overpaid like we did in Charlotte Web Holding. So did founder sell their share? The answer is no. In fact, she increased her voting right over the last year, and that's what we again went deeper. Now, this is very technical, right? Now let's do some simple thing. How much the company is selling? What is the company revenue? What is the company's revenue? Okay. Now company's revenue is roughly $2 billion. What does company do? Company sells fixed boxes and company sells online clothing. Now if you go to the website, create your login ID password with US or UK address, I can promise you one thing, you will not be able to see any other company like this on online space. So they say we don't want you to search clothes, we want to make it a browsing experience for you. Which means this t-shirt, if I want to buy again in a different color, different size, they have available. They will show me what is important for me. They will not show me everything. So sometimes what happens, I want to buy an L size t-shirt, but in the other website, I need to see every brand, and I cannot go by brand, I cannot go by my exact size, which is what is available on this website. So $2 billion is the current sale of the company. Now, what is the total addressable market size? See, Tesla is still holding the share price, right? People who bought Tesla last year, they all are making money today also. It went some 20-30 times up in the next 3 years. Tesla total addressable market is not car market. Tesla total addressable market is the self-driven car market. So Tesla's capability to automatic drive the car is also the market which Tesla is addressing, and that's a huge market. And because of that, Tesla is today 3 or 4 times of Toyota. So if the company's total addressable market is $200 billion in the US itself, then even if the company achieve 5% of that, which is $10 billion in the next 5-6 years, the stock price, and once the momentum comes back, it will be easily 10-15 times from here. That is my thesis. One more thing, companies selling in how many countries? Like Interactive Broker is broking in 150 countries or 120 countries. Zoom software is available in all the countries, I believe. This company is selling only in UK and in the US, which means the whole world is left for the company to grab and be the first, because they already have recipe, they have everything available. All they have to do is just replicate the story everywhere. And if that is the case, company is not a sell. Company could be a buy at this price. And if that is the case, I will do further study, or that investor should do further study and look if he should allocate more money here and reduce his cost price. So I hope you understood that when a stock is 50% down, and this is also a reason that we have not sold the stock, because 108 would have become more. So we are not greedy, because if we are greedy, we would have sold 108, or maybe if you are so even you should not sell. But let's say you are not looking to make 10 bagger, 20 bagger in the stock market. Then as an investor, you can sell and go peacefully. But the basic challenge is what Thomas Phelps said. For people who are long-term invested in the stock market, every sell is a confession of error. I'm repeating, for people who are a long-term investor in the stock market, every sell should be argued as confession of error. Basically, if I would have held Amazon from 1997, today I would have sitting with 1,500 times of my capital. But patience is the most important virtue, which is very least followed. So that is one thing, because every time you will sell, now you have to buy something. But if you want to sell and you want to buy a dream house of yours, or getting your daughters or boy or the son married, or start your own business, if your stock is extraordinarily high, you can sell. So I think this is very clear. Let's take one stock from you, because I'm sure you want to also ask that if you bought a stock at a very, very high valuation and it has come down, now what you should do. So if you can give me one stock, any one of you, I can do a live analysis and tell you whether you should sell or buy. Alibaba, very good. So Alibaba, again, same situation. First of all, let me ask you, sir, what is your name? Acha, Akhilesh ji, Alibaba, how much of your net worth, liquid net worth of the stock investment? So let's open another sheet for you. Thank you, Akhilesh ji. So Akhilesh ji, Alibaba, first question is, how much percentage of money have you allocated? So 5%. 20% of your investment is there. So then I have got peanuts. So just kidding. So 20% of your liquid net worth is there.
No, but whatever I have money out of that I have invested, not all my liquidity.
Right. So okay. So let's do this way. You have a stock portfolio of 100%.
Yes.
How much is in the
20%, out of 120.
So that's what I'm saying. I got peanuts. So basically, you're saying. So it's a very large share, right? Do we agree? It's a large share.
Yes.
Large. Now, question is, what is your average price?
Average price is approximately 156. I started buying from 200 something.
Okay.
And I try to balance up to 156.
Okay. So you're already a prudent investor. Now, question is, what is the current price? Is 140 or more than that?
No. It went to 130. Now this week, I think it is again 110 approximately.
Okay. So by knowing you, I know that your nature is to bet big if you are very confirm to make more money or good money. So the only risk which I see here is part of your liquid net worth is high. Now, are you reading about the business? Have you ever taken pain when you go to the office, or let's say you can tell your son that please print this annual report and I want to read what is happening. In general, I am aware what's happening. The earnings are going up. Earnings are going up for Chinese business.
Right.
They're not going down. So here, and plus you have Charlie Munger to support you. Charlie Munger has betted big on Alibaba, so you have no reason to sell. Having said that, you should have a longer time horizon, and you should try to not put all the eggs in Alibaba.
Right.
So yes, you should. And now your question is not what to do. Your question is when to sell actually.
Right.
So
When do I sell and shall I hold or not? Because see, my ambition is also my horizon is approximately 2025. After 24 or 25, I am going to look anything or not. But my question is, can I hold or I should book the loss and go for other stock?
see, first of all, your average price is 156. You're only not been losing 50%.
Right.
So first of all, you should not sell it. One. Second, you should read about the business. Are you reading about the business? Are you taking the pain? The way I send you the books quotation. Are you taking the pain to hear Charlie Munger or Monish Pobrai that why are they buying Alibaba? What the metal they see?
Yes, for that they are seeing the growth. That time I am not giving my full time, but sometimes I used to read and see when who is investing, and recommendation also I used to see for other analysis and all. And
So-
sometimes when they are releasing their quarter earning, so that I used to read, but I am not very good expert to understand their whole earning and all. So
Okay. So you don't have to basically read the earning. You have to see only very basic steps. Are they raising more money by debt? One. Second, are they basically growing their business or not? Then you should basically look at a very simple understanding. Are their valuation attractive? And I know that is attractive. Everybody knows in the world.
Right.
Here there is challenge that you will sell it early. So I'm coming from a client's place, and this man has not made money with us because when he invested, then the portfolio went down 10-15%. So we were sitting, and I just told him that in my stock, one share is there, and that share I had bought at 140 rupees. And I told him that. So he was asking me, okay, should I buy? I said, you can buy. It's in my portfolio. So he bought at 230. Okay, and he sold at 270, and I'm still holding at 290, and I will still hold it for 400 also,
Right.
because I'm reading the business. And he was actually checking me. I don't give tips, but he said, "Wow, Bhuvanji gave 230 stock price and it is now 270." And it could be merely a luck. It could, this 40 rupees on 230 is just a luck. So anyways, what I'm trying to say that I wanted these investors, even that friend of mine, that you should read, because then only you will enjoy. Put big money. Like for example, you're saying you have put good big money on Alibaba. That's a great sign. But now you should read about it. And if you do not understand it, do a course, a lot of online course, or you can come and meet me, or you can read a book on Buffettology or Peter Lynch, because it is a significant money. It is like a property what you buy, right? And when you buy a property, how much research do you do? Similarly, Alibaba, when you're buying, you should do a research, but definitely it's not a sell. But you should be cautious enough and should be aware that your time horizon can extend above 2024. So that's a wrong time horizon if you ask.
ये भी मेरे को ये भी ट्राई करने हैं उनके।
This
अभी
one,
मैं आज से चूरस मंगा रही हूँ, लेकिन कल हम लोग जाएंगे स्कूटी से।
Vijay ji, आपने
Pre-washing है।
raise किया था hand. Let's talk to you. I'm muting everybody. Vijay ji, you can unmute yourself and then speak. Guys, please give your example so we can take it live. So Alibaba is example what Akhilesh is given, and in my opinion, he should read about the company, first-hand information. He should listen to the current CEO. This company, just by price is down, he should not sell. And the time horizon is wrong, which is I think only 2 years from here. Time horizon should be a little longer.
Bhuvanji, one question. When you see that its long-term prospects are good beyond, say, 2025, 2030 and so on, then why is it not a part of founder's portfolio yet?
Okay, so we're discussing portfolio here now. Okay, so basically this is not a portfolio per se discussion, but I will just answer it. So what happened? I do not want to overpay. Just now we discussed that. And when you don't want to overpay, you like a lot of companies. And let's take the life example also. So I love some companies. Let me show you those companies also. So you will understand my philosophy. So we are fund managers. We are paid to buy cheap assets, not only good assets. So let's say, for example, if I would have bought Shopify last year, I love the company. Okay. Now, if I go to Shopify and if I do a 1 year chart, so you can see I would have lost money. You can see, Shakarji, just like Bitcoin at valuation, I don't understand, so I don't buy it. Now, Shopify, as per Peter Lynch, is now undervalued. But last year, Shopify was overvalued. So it is beyond my conviction to buy. I cannot overpay, or I should not overpay for an asset. Even I will go wrong. I'm not saying I will not go wrong. Then there's a company called HubSpot. We use the company, we love the company. So HubSpot, why it's not coming? HubSpot. HubSpot is a great stock. It is in 5 years. It is, any guesses how much money it made in 5 years? So in 5 years, this company has literally made 5 times. But if I would have bought it last year, I would have been doldrums. So if you see YTD or 1 year, no money has been made. I know this is not important for a long-term investor, but this is investor only asking, no. And I have got the maximum attendance today. And I can tell you a lot of people have these stocks, and I wanted to show you one portfolio, but I don't want to disclose the name, where stocks are 80% down. And God forbid how and why people buy. So this is the reason, Shakarji, I do not have the companies I love. I don't want to overpay. I am very sure that I want to have these companies at some point of time, but I cannot overpay. One more company I will tell you, and this is not a stock recommendation, guys. Please don't get them in your portfolio. Individual stock investing alone is a big risk. This company also great run actually, if you see, but in 1 year chart it is down. So where I love Tesla also, they're all 40% down from their peak. So one investor we have who basically is a self, he invests himself. So there's a company called Palantir. I don't know how to spell it. 1 minute. I'm sure you know this. So it's called Palantir. They say that Palantir interview is tougher than Google and Apple. You might get into Google and Apple, but you cannot get into Palantir. So he told me you should buy Palantir. And he's an amazing guy, and he tells you just to buy stock, in every 5 minutes. Knowing I'm a fund manager, he suggests me the stock. I said no problem. I saw Palantir was at a valuation of price to sales 100. Price to sales 100. I said, boss, I can't buy this company. And today, if you see, it is smashed. Palantir has lost so much money to the investor. If 1 year horizon we see, in fact, let me do the max also. So it has just gone from IPO price to back to the IPO price. But it went 3.5 times. So everyone who bought here has to wait for 5-6 years. And the problem is, since they have not read the business, they are not going to come and do the averaging. So Nishanaji, the reason I have not bought these companies, because my objective is to make you money. I understand that I have to buy long-term compounder, and which was also there, but all those long-term compounders are down today. So if I have to also balance out. Now is the time within 1 year when I am going to buy this long-term compounder, but I don't want to overpay. I am trying my level best how much less I can pay. For example, China, we had no plan to enter, but we bought a company, we are 35% down, but we are so sure of making 4 times because we have more cash in the balance sheet than the market cap value today. So it's insane valuation. The day this noise of China US will be settled, like Alibaba was doing great, the whole Chinese, and this year the whole Chinese stock market might go up, but our time horizon is longer. So this is the reason we have not bought this company. So how did we make money last year? We made money by buying companies which are not a long-term compounder. So if I keep them for long term, I will not make money. But if you see the 1 year cycle, we were sure that this is the time to buy these kind of companies, and now they will not be the companies to keep. So we bought this company at $12 and we sold at $52 already here, which I think we showed you in the presentation. Then we bought this company, and if you see the company's history, I'll show you. Nishanji, did I answer your question? Can I go with Vijay Mudliarji?
Yeah, you answered my questions very well. Just one more small question: that are you benchmarking the founders portfolio against S&P 500 or any other index?
Okay, that's also a very good question. So I'm absolutely not benchmarking against any index. First of all, I have no comparison with anybody. If that comparison I have to do, I would have been a job. So I am not a professional fund manager in a great company, BlackRock or something, trying to beat the index. I am here to make 15% return to the clients, and that also will not be made every year. 36% was a chance, 22% was a chance. Oh, 1 minute. Sorry.
Why can't you mute all people?
I do it, but then they are allowed to unmute and then new people join, so no problem. So I am not here to beat any index, but let's say you want me to see beating index. If you see from the 2-year perspective, S&P gave 15% 2020 and something around 25 on 2021. So I have beaten them anyways. But I do not have stocks from S&P. I have stocks from Russell 2000 index. And if you see, I have also stocks from China and Canada. So all you can do is there's something called Vanguard All Stock Index, which has done 12% last year. If at all you want to benchmark me against that, you should. Having said that, if you don't make, let's say 15% return, and let's say 5 years is your money is not 1.9 times, and if index is doing much better than me, where the average of index is 9%. The basic challenge, Nishakarji, everybody is seeing index last year. Nobody is understanding that index average for the last 15-20 years is only 9% or 7.73% to be precise. So that's the basic mistake done by investor. Do not judge a portfolio in a 1 year or 2 year run. Have I answered your question now, Nishakar ji?
Yeah, yes, you answered. Thank you.
Thank you. Yes, I think we had Mr. Mutliar.
Bhuvan, one thing is, I do understand that, there is no specific, a benchmark or a checklist by which you evaluate a stock price at any point in time, because there are many variables involved. All right. But my approach, my experience has been that, there are fundamental companies, companies which are very fundamentally strong in terms of the business per se. A product is good. Whoever takes that company will be able to run it, what you say, with little up and downs. Okay, not technology companies like Tesla, which has got very, very big visionary outlook. They want to go to the Mars, or they want to go totally something which is fantasy. Okay, yeah, fantasies can come through because they are proved again and again. But I wouldn't say that those are fundamentally strong companies where you can really buy stocks at even when it is very high and hold on with the hope that someday, around 5-6 years, a long term, it will definitely give you enough margin and you will make an average of 7 to 8%, and then you can exit. Now, having said that, there are fundamentally good companies who over the years have maintained a good rate of return. There has not been a big dip or where rise. The speculation is not that much. So in those cases, tell me one thing: at what rate you should buy those? Like, for example, classic example is Asian Paints today.
Okay.
Can I buy Asian Paints today?
Yes, you
at
can.
the rate that it is?
Yes, you can. Yes, you can. See, understand. Asian Paint, you are buying
SDFC for that, TCS,
yes,
ITC.
Yes, you can. Yes, you can.
At any rate, though it is very high, means it is says around 2 or 3% less than the 52 weeks high. Can I buy at that rate also?
You see, 52-week high is high for the last 10 years, not for the next 10 years. First, understand that. And Asian Paint is selling what they were not selling earlier. So I have this Asian Paint distributor as a friend. So you should go and visit Asian Paint, and you will find that Asian Paint is selling you the Harpic now. Asian Paint branded Harpic, and now they are coming to tile business, etc. So please understand the business. There is one more saying: how you have got here, you will not reach there. So Vijay ji, बहुत important है business समझना. Asian Paint 52 week का high इस 52 week का है ना, next 10 years का high नहीं है ये. और जो आप टेस्ला के बारे में कह रहे हैं ना, वो टेस्ला के बारे में भी आप वही कह रहे हैं. टेस्ला भी 52 वीक हाई जो है ना, कोई फर्क नहीं पड़ता. आप $1000 में ले लेंगे तो भी टेस्ला में पैसा बनना होगा तो बन जाएगा. टेस्ला को भी नहीं पता ये जो प्रॉब्लम है ना कि हम परफेक्शन चाहते हैं. प्लीज अंडरस्टैंड कि आप टेस्ला का स्टॉक आज के प्राइस में ले लेते हैं, सपोज आपके पैसे यहां से ही बन सकते हैं. Amazon के शेयर आपने किसी भी प्राइस में लिया होता 10 साल पहले, आपके पैसे बन ही रहे होते. एंड Amazon ऑलवेज वाज overvalued. So great companies are overvalued, and Tesla is not a fantasy. It's a great company. You can ask people on the show itself how many of them want to buy a Tesla, and they're all raised, so they love the product. Company is solid. Yes, it is highly overvalued, but you're only buying 10% Vijay on your portfolio, and you don't have all the money to buy Asian Paint today. So you will buy Asian Paint today. Let's say you want to buy 1 crore, you will only buy 5 lakhs. Then again after 6 months you will have bonus, or maybe something you will again buy. So this question will only come if this is your last Asian Paint buy. Are you buying Asian Paint for the last time in your life? See, it is
No, you will average out based on the return,
Then-
and you will try to buy it at lesser interest so that your average cost comes in out, and then probably wait for as a long run, because it's fundamentally good stock. It's not going to dip 50, 30, 40% down.
not
It
good.
will,
It's not going to dip is a statement. It should not dip. Market is a endlessly fascinating lady, endlessly complex, ever changing. Sir, बीवी से पंगे मत लीजिए. Stock market is like your
no,
girl.
that is right. But then when you see the lower cost of the stock, you come to know the dip that it takes.
For that, Vijayji, you need to know how the stock price is decided. Stock prices. So, can you tell me? Anybody can tell me on the show. Let's hear from you. We'll have 10-15 minutes more. Why the markets have crashed in the last 1 month, and why we have these stocks correcting 40-50%, where we have some stocks correcting 5 to 10%. Can anybody answer this to help Vijayji and me? Any one of you. If you can't answer that,
No, Bhuvanji, one thing very clear. Bhuvanji, one thing very clear. Okay, not all the stocks are directly correlated to the index. Okay. Some stocks, for example, currently also.
इंडेक्स में अभी मैंने इंडेक्स नाम ही नहीं लिया. इंडेक्स तो सबसे दुनिया में सबसे घटिया चीज इंडेक्स है. इंडेक्स की तो बात ही नहीं कर रहा मैं कह रहा हूं some stocks have not corrected that much and some stocks have corrected too much.
Vis-a-vis what, like?
Capital reserve, yeah. जैसे Apple.
हाँ. मैं हैव योर गुड नेम सर. आपका ईमेल आ रहा है यहाँ पे.
ये मनदीप बोल रहा हूँ. राज.
हाँ जी. कैसे आप? हाउ आर यू?
बस ठीक है. ठीक हो आप?
हाँ जी. By the way, just to inform everybody, Mandeep is one of the biggest investors in the stock market, and he keeps he has made good money. So let's hear from him. Yeah, Mandeep ji.
ठीक है. It's not been that good. Yeah, I did some wrong investments too.
Not really. Please go ahead.
No. You were just asking, KB, why some of the stocks are only down 10, 15, or 5% is because of their cash balance. Cash reserves. So
No.
that would be,
I'm
no?
sorry. That's not the answer.
Okay. I just thought,
I'll answer it. And Ray Dalio has answered it. Warren Buffett has answered it. And it's a very simple thing. But let's hear from somebody. Else I will definitely tell you. Anybody wants to try?
Is it because people haven't sold as much of that stock, right? So there is some bit of conviction that people have, the sentiments are strong towards the stock, they've not sold it.
So that's true in the short run. Yes, you're right. It's a demand and supply. But there's a reason why they have not sold it, right? Because they feel it is not overvalued, right?
Absolutely.
And the question is why it is not overvalued? Because it is more profitable. So the stocks which have been corrected. So first of all, we have to understand how stocks are calculated. So it's very simple. So I think again share the screen and show you the. So Mandiji, please listen to it. And I you might find me unreasonable here, but this is not my definition alone. This is how the stock market works. So stock prices are nothing but discount of future cash flow. Discount of future cash flow. Now let's understand this also. What is future cash flow, etc. So let's say, for example, I have a property, and property, the whole cost of making that property, the land cost and the fitting cost and build up cost is $2 million. Now, can you tell me what should be the price of my property, selling price of this property? So this is the cost of building the property, Now, what should be the selling price of my property? Can we say it is $2 million? The answer is no. Because the rental which I am getting from this property is $400,000. And if I am getting $400,000 and if the market has a 5% rental return going on, then my price is actually 400,000 divided by 5. What I am trying to say, that it is the juice which can come out of that property which decides. So the property value is coming $8 million, and it has happened in Dubai. And today also properties are holding up in New York, London, because they're in that prime area, that people can't build more. So this is the valuation of the property, but the cost of the property is only $2 million. Similarly, the stocks are basically not the book value. So you see a book value means nothing but asset minus liability. We all are businessmen here, maximum of people are businessmen. Asset minus liability is the book value. Book value means, so let's say today I have got all the money in the world and I want to become Amazon today or Microsoft. Can I become? I cannot. At least I cannot. Or I want to become a Stitch Fix. Or let's say I want to do Mandeep's business. I cannot do it. Mandeep ji knows his business. Even if I have equivalent money of what he has, I cannot become his business. So he has also cash flow coming in. He knows how to get those cash flow. So book value is not the measurement of the stock price. Not the measurement. Just explaining why the book value is not the measurement of the stock true value. Now the true value of the stock is how much can I make money from the stock. So let's say my stock is $100 million. My stock is giving me every year $100 million. So 2021 I got $100 million. 2022 I'll get $100 million. 2023 I'll get, let's say, $110 million. 2024 I will get roughly $140 million. Like that, in one particular year, I will say the amount my business will only give me $5 million. Only 5% return, and the total value will be roughly, let's say, it's called terminal value. This is called terminal value. This particular value is called terminal value. Now, my stock will only grow by 5%. I have discounted all the future cash flow. Now, discounted means can I add this all figures, which is roughly, let's say, I'll add it here. So I am summing up this year cash flow, comma this year cash flow, comma this year cash flow. Now my question to you is that, do you think my stock price is 1350? Can I add this all or not? I cannot add because they are cash flows on different time zone. The only way I can add it by discounting them to today's value. So today if you are earning 100, it is equivalent of 110 next year. Today if I give you $100, or if I give you 110 next year, are the same. Generally in the stock, when we discount the value, we don't use the the business rate, we use the risk-free rate, or we use the 10-year treasury. We use 10-year treasury rate, 10-year US government bond rate. And you would have noticed that it has gone up. Why it has gone up? Because there is an expectation in the market that Fed will increase the interest rate 4 times this year. Since Fed will increase the interest rate, the risk-free rate itself has gone up. Since the bond itself has become more attractive now, the whole stock market has to correct because the discounting value, which is the denominator, has increased. And if you are non-profitable company, your price was more overvalued, it has to come significantly down to adjust to the current interest rate scenario. Mandeep ji, did you understand what I said?
Yeah, Hanji.
It is basically, I'm addressing you because very important. आपका बहुत बड़ा portfolio, you should be very important. जो future cash value है Mandeep ji, it get discounted. You can't, or you are also doing projection on your company now. So basically, all the year's value get discounted today's value. That discounting has happening on the interest rate, which is the 10-year treasury rate. That has gone from 1.5 to 1.77.
Yeah, that's right. Yeah.
Because of that, the stock prices are correcting.
Yeah, but they're saying it's like, the 10-year treasury will be, the 10-year interest rate will be still okay. It's about the 2-year. This is what the...
That you are discussing on the recession side. We are not discussing recession. Recession नहीं आ रहा है. Correction नहीं. Correction है, crash नहीं है. Let me openly again share with all of you how to read crash. I am no Pandit. I will never predict, but you can use common sense. मंदिर जी आप तो आईफोन के बिजनेस में हैं. लेट मी आस्क यू, आपके पास इनफ गुड्स हैं, सप्लाई क्राइसिस चल रहा है, डिमांड क्राइसिस चल रहा है आपके साथ?
नहीं, सप्लाई क्राइसिस चल रहा है सर. आई एम मेनली इनटू सैमसंग, but yeah, सप्लाई क्राइसिस चल रहा है.
सप्लाई क्राइसिस चल रहा है. मंदिर जी आराम से बैठिए, ये मार्केट क्रैश नहीं आ सकता. नाउ लेट डिस्कस. कैसे डिस्कस करते हैं, कैसे निकालते हैं? सो देयर इज समथिंग कॉल्ड लीडिंग इकोनॉमिक इंडिकेटर. लीडिंग इकोनॉमिक इंडिकेटर. Please understand, stock market is nothing but replica of what's happening in the economy. It is just that they work 3 months to 30 months prior. Now there are 3 types of indicator. This is not part of the session, but this is very important to understand. because some of you are getting fearful that there could be further crash. And when I hear from the investors, I want to ask them, अच्छा बताओ कैसे आएगा? And then I don't get an answer. Then I end up educating them. And I can also go wrong because there could be a bomb blast or there could be a China-US war, which will make everything haywire, where there will be factories will be shut and the leading economic indicator will not even get time to react. But in general, when the orders are getting cancelled, the unemployment insurance is increasing, the consumer sentiment is going down, the inflation is going up, the interest rates are going up, stock market is going down. Summing up all this, if the LAI or leading economic indicator is not growing, after that between 3 months to 11 months, the crash comes as per the historical evidence, which is not necessarily true in the future. Having said that, you will say this is very technical. Don't worry. Just go to the conference board website. We discussed this in one of the webinar. मंदिर जी ध्यान से सुनेगा, बहुत important आपके लिए. Leading economic indicator, conference board leading economic indicators is what you have to see for US. You come here and you see, and every month this data comes. So next data will come on so the last data has come on January 21. The next will come in February. Now let's look at it. The leading economic indicator for US is increased by 0.8% in December, which is 120.8, following a 0.7% increase in November, following a increase 0.7 in October. This comprising of all the, and we don't have to read other things, and we have to just see what are these 10 parameters they have. Average weekly hours manufacturing, which means if you don't have an Apple phone, if you do not have enough supply, you want to give more money to the laborers and they will be doing overtime. Right now this is high. Companies need more people and they're willing to pay. So in the US, this comes every week. This data come every month, sorry. And some of them come every week also. That's why you saw every Thursday, Friday market goes up and down because the data are released. Then average weekly initial claim for unemployment insurance. So in US again, you have a unemployment insurance, and if you are not able to find another job, you can immediately file with the unemployment insurance, the authority, and get the $300 or whatever they give you. Manufacturers new orders, consumer goods and materials, index of new orders, like that. Now this is down, right? And then interest rate spread, जो अभी आपने कहा मनदीप जी, 10-year treasury bond less federal funds. So all this inclusive is LAI. आपको कुछ नहीं करना है, guys. You don't have to calculate anything. You have to come here and see last month LAI का क्या हुआ. यदि आपको इतना ही botheration हो रहा है तो recession का इसका, यदि जो आपको निशाकर जी ने कहा पहले या जो अभी विजय मुदलियार जी ने कहा वैसी कंपनियां खरीद रहे हैं, तो आपको इन सब का कोई काम नहीं है. बट क्या होता है ना, सबसे बड़ा जो प्रॉब्लम है ना स्टॉक मार्केट में कंपाउंडिंग मशीन के बीच में, वो हम खुद ही हैं. बिकॉज देयर इज नो वैल्यूएशन प्रॉब्लम. आई एम नॉट फीलिंग गुड, आई डोंट वांट टू पुट मोर मनी, आई डोंट नो व्हाई आई केम टू स्टॉक मार्केट, ही टोल्ड मी सो आई केम, आई वांट टू मेक मनी एवरी डे. All these are the issues which investors is facing. And Tesla also, if you buy 10% on your portfolio at the buying cost of your $100 portfolio, it's fine. Or else you need to read a lot to understand why I don't overpay, why I am not buying Tesla. I did not buy Tesla last year, but maybe I will look at it this year. So please understand, the stock investing is not for individual. If you want to invest individually and your stock is 50% up, at least now you should read it. If your stock is 50% down, at least now you should read it. But if you don't want to read 50% up or down, exit. Don't be in the stock market alone. Now, time to finish the webinar. Mandeep ji, I hope it made sense. Nishagar ji, Vijay Mudliar ji, I hope it made sense.
Yes, very much.
Yeah.
As always, Bhuvan.
थैंक यू. सो आप एक सर्विस ले लीजिए ना. मान लीजिए आपको नहीं करना किसी फंड मैनेजर के साथ में, आप कोई सर्विस सब्सक्राइब करा लीजिए. एटलीस्ट दे विल गिव यू सम रीडिंग मटेरियल टू रीड. बट यदि टाइम नहीं है तो ये आपके लिए नहीं है. एट सिंपल एज दैट. क्योंकि इसमें तो क्या है, 50% डाउन होने के बाद आदमी की हिम्मत टूट जाती है, जबकि वो टाइम होता है बाय करने का. और यदि बिजनेस पढ़ा ही नहीं है तो टाइम कैसे होगा. भाई आई हैव अ स्टॉक व्हिच इज नॉट मेड मी मनी इन 2.5 years. दैट इज ऑल्सो लॉस. But the business is improving and it is going back to solid level. Now, whenever I talk to this stock to even my wife also, she want to just buy. I'm saying let's sit down and discuss the business of the company. No. What is net interest margin? What is efficiency ratio? Basel 3 norms. So when you are not interested in this, probably what you are doing, Vijayji, that could also be done. That I want to buy great companies, I'm using their products. So we have an Excel sheet, classic Excel sheet, Vijayji, which we
Bhuvan, the idea here is there are so many variables involved. You know,
Yes.
when you're talking about research and fundamental variable involves, those variables have to be constantly watched over a period of time and correlated to certain fundamentals.
Agreed.
Because some variables are momentary and not very what you say on based on fundamentals.
Absolutely.
Okay, fundamentals. Okay, the what is fundamental is the product. Is the
Right.
product going to be in demand for long term? Is the sales and the top line going to grow? Is it going to outweigh the CAGR of the industry in which that company is? Okay, what are the cash reserves? There are some 4 or 5 things in the balance sheet that gives you an assurance of the fundamentals of the company.
Agreed.
Okay, other things are speculation. I wouldn't say speculation, but are only highly volatile and dependent variables. Okay.
Okay.
So, okay, fine. Where the risk is more, you make it right. For that requires continuous monitoring, and timing is the key.
Timing is not the key.
It means to exit the stock or when to buy, you have to be on the lookout, right? You want to on the lookout, right? You want to have be on the lookout timing of the entry and exit. So, well, fine. That is where the experts come in, and that is where the concept of mutual fund is come in now. Okay, where you know the cumulative retail buyers. Okay, they pledge their faith and allegiance to a mutual fund based on certain fundamentals on the performance of the fund, and they're happy with whatever is the rate of return that they get. But as an individual, if you want to enter, yes, of course, I agree with you. A combination of fundamentals with monitoring of certain variables is essential to make money.
Absolutely.
That's what you are saying, and agreed. No doubt about that.
But all of it, Vijay, individually when we're investing and not reading too much, we will put less money. And when we'll put less money, it is better not to put money. Because when we invest in property, we put 2 crores or $2 million. When we come to stock market, we put $10,000, $20,000. What is our objective? By investing money and by chance you make money last year does not prove anything. It might happen. So like say Bitcoin, right? Bitcoin made money for people. Now last year, whoever poured in tons of money in Bitcoin because they made money, they're all in doldrums right now. Now, if you have not studied the concept of Bitcoin, I'm not a Bitcoin investor, so I have no idea. Then you will eventually end up selling, and overall you say, boss, बहुत stress हो गया, I'm closing. The point is, even if you are doing it, you're right. You make some 10, 15 fundamentals and follow it, and don't see the market every day. So Vijay, absolutely agree with you on that matter. Just to show you an anomaly of a stock. So this company called Huya is right now having $1.72 billion cash. $1.72 billion cash. And the market cap of this company is running at roughly $1.3 billion. Now that also happened in the stock market, where you have more cash than the market cap. Now let's hear what successful investors view on falls in markets and when to sell. Vivekji, I'll just come to you after 2 slides. The best chance to deploy capital is when things are going down. So definitely it's a great time. But does it mean the next 6 months will be positive or negative? Only God knows. But if you have a 5-year horizon and you find that this is the good opportunity to buy, go ahead. Our favorite holding period is forever. We are just the opposite of those who hurry to sell and book profits when companies perform well, but who tenaciously hang on to the business that disappoint. So one important thing, you should sell if the business is disappointing. But even this theory is challenged, because if you would have sold Apple when Steve Jobs left, then you would have completely forgotten Apple. But it could have been a better decision to leave Apple when the business was not doing good. So what Warren Buffett is saying, don't stick to the bad business, get into the great business. Peter Lynch, very important. Deciding when to sell is exactly the same thing as when you buy it. You have a certain story, why I bought this. This is what very Vijay is saying, the good product. So that's called scuttlebutt. Good product, good supplier, good market demand, how the payment terms, all this is very important. And the company has plenty of cash, so they are not going to go bankrupt. So we have this 2-3 stocks 40-50% down. We don't really care because they can't go bankrupt. You sell the company, that was the growth story when there is no room to grow. Now these companies have a great addressable market and good moat. So there is no point we're gonna sell them. So basically, if you have a great company, 40-50% down, don't sell it. More people have lost money waiting for correction. So this is what Mandeep ji aapke liye hai. More people have lost money waiting for corrections and anticipating correction than in the actual corrections. So we get a great company.
But correction of which stock is also important, no?
हाँ तो वही ना.
Correction cannot be a benchmark for any stock, right? It
Right.
depends on.
नहीं बट क्या होता है ना विजय जी, यदि मेरे पोर्टफोलियो में 40% करेक्शन आ गया तो मेरे लिए तो क्रैश है ना. मैं तो उसी आई विल ओनली व्यू द होल वर्ल्ड फ्रॉम दैट पर्सपेक्टिव. मेरी प्रॉपर्टी 2011 में मैंने 10 टाइम्स में ली थी दुबई में, तो मेरे लिए तो वो पीक हो गया ना. मैं तो एकदम गलत प्राइस में ले लिया हूं. सो प्रॉब्लम ये होता है ना कि आदमी मार्केट नहीं देखता है, आदमी अपने पोर्टफोलियो देखता है.
Then that means fundamentally the business fundamental itself is negative. So naturally you can just what you say get out of that, because it's not going to happen anything. It's going to be this thing.
कैसे ये होता तो हमें कुछ करने की जरूरत ही नहीं है. We would have not existed. What one factor we are seeing here in the valuation is emotions. And sir, जब मुझे अच्छा नहीं लग रहा है तो मैं तभी बेचूंगा ना. I will only hit the button when I am not feeling. तो जब 40-50% गिर गया है तभी तो कोई करेक्शन की बात करना.
होल्डिंग पावर पे भी डिपेंड है ना.
होल्डिंग पावर भी है, लेकिन जो बचा हुआ है उसको ही वो मैं तो पढ़ी थी कंपनियां, मेरे पास 100 स्टॉक्स हैं. अब 100 स्टॉक में मैं कैसे पढ़ूं? तो मेरा कॉन्फिडेंस खत्म हो जाएगा. मेरे एक बहुत अच्छे इन्वेस्टर हैं, मेरे फ्रेंड, मेरे वन ऑफ द बिगेस्ट इन्वेस्टर हैं. 35 साल की उम्र, 35 years old he is. He called me 5-6 days ago. He's saying, क्या हो रहा है यार मार्केट में, व्हाट इज हैपनिंग? आई सेड नथिंग, इट्स अ करेक्शन हैपनिंग. यू नॉट स्ट्रेस. काय को स्ट्रेस होना है? आई एम जस्ट गोइंग टू स्लीप इन हाफ एन आवर. देन ही सेइंग, अरे सेल कर दो यार, सेल इट नाउ. मैंने कहा व्हाई टू सेल नाउ, फॉर व्हाट वी शुड सेल? सो व्हाई अ गाय हु इज अ लर्नेड बैंकर, who's a good investor, it is the human emotions. When you see red, sell it. When you are not read about the company and they're 40-50% down, it's a correction for me. Vijay ji, one very important thing I want to tell you, and मैं आपको सेल्स की लैंग्वेज में बताता हूं. RM ask business to a client as per his capacity, not the customer's capacity. ये तो मानते हैं, आपने तो कितने साल बिताए. So I see the world as per my understanding, not your understanding. So when my portfolio is 40% down, it is crash. Though my portfolio can go down a further 40%. So that is the biggest challenge that we have to demystify. We have to basically, the ego are smashed here. And if we can smash our ego in the stock market, I'm openly admitting that I bought a company at $7 to $10 and it is $1 and it's a valuation mistake. And I'm not ready to commit it again and again and again. Because I don't know that company will go back in 1 year or 2 years. And if 5 years are gone, that company has not given any positive contribution. That is why consciously as a fund manager, I need to look at the assets which are quality and cheap. Where you as an individual investor, because you can only forgive yourself. People don't forgive even their wives also, if for one single mistake. Or a family may, even father will tell you, you did that mistake 5 years ago. You did that mistake 5 years ago. So the most important thing is, as an individual investor, you can keep buying, and I as a fund manager has to have a different time frame. I would love to buy an asset when it is little cheaper and yet very good quality. Charlie Munger, on the same topic, you get crazy booms. Remember the .com boom when every little building in Silicon Valley ran at a huge price. And a few months later, about a third of them were vacant. These are these periods in capitalism. And I have been around for a long time and my policy has always been to just write them out, do not sell. So see, even Charlie Munger is saying, I'll buy them at a lower price, but when these periods will come, I will not sell. Because you never know, because the moment you will sell, again you want to get back to the market. Because if you will not go back to the market, you will have that whatever loss you have had from the top, you will not be able to recover. Now that's my quote, which I think I have discovered in my life after every time reading Warren Buffett's quote of that first principle, don't lose money. The second principle, don't forget the first rule. Heads, I make a lot of money. Tails, I don't lose money. If we can enter the market with this thought that I have come here to make a lot of money, but not at the cost of what I already have. I had shared with you, all of you, we'll take 5 minutes more. I have shared with all of you a few days ago about Mr. Rajat Gupta and Mr. Madoff. Rajat Gupta had $100 million. He was a McKinsey CEO, Goldman Sachs board member. But somewhere he wanted to become a $1 billion guy. He wanted to be in that $1 billion club. He came to know that Warren Buffett is investing $5 billion in Goldman Sachs. Those days when the Goldman Sachs was absolutely in doldrums. So it was kind of a show that Warren Buffett is invested, so money will be made. He called his counterpart in Sri Lanka, Mr. Ranganathan, as a broker, and he made $90 million in insider trade. And what happened, you all know that he was behind the bar for insider trading. And the most precious thing he lost is his reputation, and which cannot be brought back. We all know that reputation takes years to build, and one email for the reputation to lose. So what is important that when you are coming to the stock market, whatever you have made, you should not lose it. So friends, you pay 5% profit to somebody, or 10% or 20%, or you work with a ETF, or you work with a research company, or let's say, a mutual fund company. Make sure, don't have a philosophy, I will only put that much money here which I can see being zero. This is not the place to make money zero. This is the place to make billions. The only thing is, we come without experience and a lot of money, and we get a lot of experience and zero money. Let's come with the experience and read and read and read. I have always been promoting reading. Our website has a lot of books. We are adding more books there. If you think you are very lazy to buy books, please send me or WhatsApp. I will send you the right books to read and maybe buy for you as well. Now, market volatility is not a cause of worry. The actual worry is the volatility in the minds of the investors. That's the last quote we would like to tell all of you. Stay calm and be focused on long-term investments for wealth creation. I think the last question I'm going to take from Vivekji. Vivekji, you want to ask? You've been raising hand. I'm sorry. Not been able to give you time. Anyone else want to ask last question? We have 3 minutes, and I think I will just show you the codes. Anyone would like to ask? Yeah, I think again you're raising hand. Can you please speak up?
Yeah.
I can't.
Yeah, Bhuvan, if we have to take 3 things away from this session, thank you very much. In fact, your sessions are pearls of wisdom. 3 things that one has to take away. Not an educated or research-oriented investor, but a prudent investor, practical and prudent investor. What would be that?
So first thing is, the way we take bath every day to clean our body, we should read every day for our mental cleanness, because even I as an investor might get swayed and sell when the stock market is crashing. But when I read every day for half an hour or 1 hour, so I have a goal, Vijayji, to read 12 books in this year. So I will request all of us to let's at least read or watch the videos of, let's say, Warren Buffett or Peter Lynch every second day or third day, or let's say every weekend for half an hour. Because once we will read it, we'll come to know we are not alone. So reading is one thing which I will recommend to all of you. That's one. The second thing from this webinar is that do not evaluate one stock on its own. So let's say you got a stock and it went 50% up. Always look at the portfolio. So please don't come to the stock market with lot of money and zero experience. First you read and read and read and then come. So please look at the portfolio. So always look at this as a basket of opportunities, individual opportunities. And look at, because you know what happened when you individually make money in a stock 10 times, you will come to people like us and say, see, I made 10 times. And when I will show you that, look sir, our portfolio has become 15% up, you will tell me, no, 4 stocks are down 50%. I said, sir, portfolio is 50% up. No, I made 8 times. Okay, sir, you made 8 times. Now, a prudent guy like me ask you, sir, you are saying you made 8 times on all portfolio. So the most important thing is be honest about your mistakes. So what here we are learning, second thing, Vijay, is that we should be very honest about your mistake. By sharing them, like what Akhilesh shared, that I bought a stock and what should I do? It will be known to people, and when it is known to people, they will keep pointing fingers at you and you will actually go and read. The reason to tell you my mistake again and again, and it is getting recorded, that I should not commit it again, and it will be only when people are seeing me. So most important thing here is being honest. The second point is honest. So first is reading, and the second is being honest. Third, please take help of either the fund manager like us or a mutual fund or a service manager, because if you can't do reading, the first thing, you can't be honest, the second thing. So one client told me, I want to again share this with you. So he bought a complex product and it became half, and he got a delivery of a share called Twitter. And I have been telling all my clients that please don't buy structure notes, but people will only learn from their own mistakes, because I am no one, why should I give advice? So now I don't give. But structure note, he bought it, and now that the stock is 50% down and he got delivery. So on $100,000 or $200,000, he got only half money back. Now he wants to know what should I do. It means he has not understood the product earlier. So with anybody we are investing here, the principle of good investing, in my opinion, that we should take out some time and go through them in detail, piece by piece, about the investing, what they're committing, and take things in writing. Generally what happens, even we face this problem, we have to fill up your forms because you are in a hurry. You just sign the forms and then we have to fill up your forms. You don't even know that stock investing is for 5 years. So the very important thing is, when you are meeting any investment advisor, investment manager, or let's say a fund manager or portfolio manager, know the risk and the rewards. You will never be unhappy if you make 20% less return or you make 20% losses, if this was discussed that this is not a capital guarantee investment and this is not a 3-year product. But you will be very, very annoyed when you did not ask and you sign all the blank paper, and the other guy, now you can easily blame him because now your portfolio is down, because he has been in sales. Sir, I will take care, don't worry. And he has taken signature on the right paper, because organizations understand they have to, tomorrow they have to be responsible whatever paper they are taking signature from you. So first is reading or watching and make a routine. The second is the honesty. Very important that you should be honest about your mistakes, which I shared with you. Third, that you should take up, we should read all the document which you are, anybody is taking investment from you. Only when you are sure, then you should go ahead. So I think that's how I summarize it. I think we have enough time we have taken. Thanks for all your love. I have a lot of quotes to share with you. I worked hard to save food in summers to enjoy the winter. And grasshopper was busy playing music in summer, hence was starving in winter. So basically start early. Today you tell your children, we love to interact with them. Please tell your wives, educate them. I mean your wife, please educate them. All of us should be good with money. And nowadays great thing is happening. My children are doing money classes. Harvard and IIM Calcutta has together they have come and they're charging us 50,000 rupees and they are giving money class to our children. So what is not been taught in the school is now what people are catching up. So we are very happy to hear that there are companies who are doing it for children, and it will be 60 sessions and it's a one-to-one session. So that kind of services are also available. So please subscribe to them. Thanks a lot for being here. I know stock market is down. Please learn to enjoy when the market is down. Be happy. Don't watch your portfolio every 2 minutes or 5 minutes. By watching your portfolio, it will not go up. Do something about it. If you can invest more, invest. If you think there are some garbages, get it checked by paying the right service or paying the service fee of our advisor. We don't do it, by the way. And get out of that stock. Don't be in the bad business. Even if you keep it for 10 years, nothing will happen. On that note, I call this the first meeting of the year close. Happy New Year and see you around, and hope to make a lot of money for you. If not this year, next year, because you never know what will happen. Thank you.
Thank you, Bhuvan.
Thank you.